So I'm just going to have to pull up those accounts. Yeah, so that's all one. Anyway, I've just so what I was going to show you is for those of you that are in the stream, what I was going to show you is this. You go into my profile and you click on the link. This is what opens up. So you get to the link tree. If you get to the link tree, you see my little mug there. This is the first one. So if you click on that one, it will open up another window and it brings you to the trading course. So this is the trading course. Tells you a little bit about me, a little bit about what you get. This is the actual syllabus that you will get for the course. So introduction to trading. If you don't want to spend the money, but you still want to see what this lesson is, then this is available on YouTube right now. You can actually watch this as we speak. I'm just going to... So you can watch this as we speak. Available for free on YouTube. That's the first lesson. Then the next lesson is all about your risk management. There's an exam on there as well. Stock selection, reading charts, chart setup, technical analysis, that kind of stuff is the next section. Then we're looking at the intraday chart patterns, which is important. What type of patterns we're looking for, entry and exits, those kind of thing. Then the strategies that go along with those patterns. This is the bit, and there's a cheat sheet that you can get off that as well that you can download. You can actually have it to hand printed off. I will just pull this up just a second. So, for example, why is this not pulling across? So, for example, this is the cheat sheet that you can do, the gap and go strategy. You can actually print that off. Tells you when to buy, when to sell, where to stop. All of that given to you, kind of giving you the feeding, if you will. Then we start getting a bit more detail. We're looking at the actual psychological element. This is probably one of the most difficult lessons that you're going to have to learn. Now, I can give you some information about this, but this is something that you're going to have to overcome on yourself. And even I'm not fully there yet. The psychological element of trading is just, horrendous. Then level 2, hotkeys, hot buttons, and what have you. Then if you're going to do this on a full daily basis as your main source of income, like I do, you'll need a business plan. You need to treat it like a business. So trading is a business. That's a whole chapter on that. This is a 90-minute lecture on that. Then I've got a small lecture on advanced technical indicators, so a little bit more, and then an introduction to options trading. So options trading is just another way of trading with increased leverage. But it's more of a swing trading for me anyway. The strategies I use, it's closer akin to swing trading than it is to intraday, certainly intraday pattern trading. So yeah, that's the course. If you go into the link tree, so if you click on the link in the link tree, that's my profile. Click on the link, it brings you to the link tree, and that's the first one. If you don't want to risk, if you're risk averse, then you want to get into affiliate marketing. The second one is a course on affiliate marketing. It's going to cost you $7. If you're wondering what these scanners are that I've been using, every day, where I get my stocks to trade, it's Benzinga. So you click on Benzinga, and it will take you into you can get your ideas, set it up, and what have you. So then, if you want to try your hand of TradingView, that's where my journaling is. This is how I analyze all my trades. make tweaks to my trading style. TradingView. So TradingView is my charting software that I use. Interactive brokers, I recommend Interactive Brokers, or if you want an offshore broker, Capital Markets Elite. Those are the two that I use primarily. And the trading platform. Everybody's asking me what the trading platform is. It's direct access software is what they call themselves. So it's you can actually subscribe to this if you have an account with Interactive Brokers or TD Ameritrade. You can subscribe directly with direct access software and access your account through the direct access software. There are a number of other brokers that you can use it with. If we go on to the services. So scrolling down here, it's all these different platforms that it does. But these are who that's in terms of the markets. CME Group, that's who I use. All these different brokers, PMX, or a lot of these Interactive, TD Ameritrade, all of these companies they partner with. You've got another bunch of these people that you can use Dash Trader on these brokers as well. So they do have a lot of partners, but if you just wanted to use it as a paper trading platform to learn it like a simulator, you can go into the simulator and it will ask you, what do you want to do? Now, I would say you've got two options. You've got the professional option or the non-professional option. Now, if you're a professional, if you're working for a financial company and you're licensed as a financial trader, then it's professional. But the majority of us, we want to be doing non-professional. So as which one do you want? Now, if you don't want to get involved in level 2, the 100-month subscription here is fine. This is for the platform. This is not my course or anything like that. I'm not affiliated with Dash Trader, but I do recommend that you get the level 2, which is $150 a month. For if you're going to be practicing trading, you're going to want a simulator. Now, most brokers will give you a paper money account with their platform that they use. But if you've not got a brokerage account and you just want to learn how to trade before you put money into a broker, then this is what you would do. You come to this one or Sterling or Lightspeed or another platform and you subscribe. And the thing is, if you go to Interactive or you go to TD or you go to one of these other brokerages, they're going to charge you platform fees anyway. Otherwise, they won't charge you if you're prepared to trade on delayed data. But if you're not trading on delayed data, then they will charge you data fees and platform fees. So just be wary of that. And it works out at anywhere between kind of $100 and $200 a month for the platform and data fees. Now, Capital Markets charge me platform and data fees, but they waive it and refund it to me if my commissions, and they invariably are, if my commissions reach a certain level. So that's what I would say is just looking at the wider chat. So that's what I would say. Get yourself a simulator, start learning to trade if it's something that you want to do. No, I mean, if you're looking at retail trading, I mean, some of these brokers are market makers in their own rights. But what you want is direct market. Ideally, you want a direct market access. Now, Thinkorswim is a good platform. You don't have to go to and that's TD Ameritrade. So Thinkorswim's a good platform. It doesn't give you direct market access, but you can trade the strategies and you're getting live data. And I'm not sure if they started charging for it or not. I think in the US they don't charge for that. Thinkorswim, if you have a brokerage account with TD Ameritrade, Thinkorswim is you get the data and everything for free. and you can use that a paper trading account there. But the majority of brokers, if you're not trading, if you don't have a certain amount in your account, they will try to charge you for data, or they will only give you delayed data, access to delayed data. So, and the answer is no, I don't trade Forex. And as such, I won't be recommending any pairs. Why would you buy a Russian ETF equity? It's because the chances are that they're going to continue falling. And you might be able to buy into them, but they've lost so much right now. If you can see a reversal signal, great. I mean, just buying something because it's down so much is not a strategy. That's a strategy to lose money. Look at Facebook a couple of weeks ago. It lost like 30% of its value. So a lot of people tried to buy it thinking they were buying it at a discount. And what happened? Lost another 30%. So, you know, it's down over 50% currently, Facebook, or Meta as they are. And that's a big, you know, it's a big, large cap corporation. So buying something just because it's down a certain level, unless you see the reversal indicators, unless you get the signals to enter a trade that are saying this is about to make a reversal, it's not a strategy just to buy something because it's in the red, hoping that it's going to reverse, you know. Oh, I had a proper dinner for the previous profitable days, and I'll continue having a nice dinner as well. So there we go. What are my thoughts on trading tomorrow after today's big loss? Yeah, I'll just scale back. So the risk that I'm prepared to take on, and this is only my own personal strategy. My max loss on a day is 25% equity. That's what I risk on a particular day, maximum. That's not how much I would normally risk on a single trade, but I won't go beyond. Once I've hit that button, once I've hit 25% loss on a given day, I'll say, okay, that's me done. I'm not trading anymore today. It doesn't matter what the setups are. It doesn't matter how good it is. I'll be like, okay, I need to walk away. I wasn't ready for the day today. The markets were against me today. Whatever way I want to make the excuse. And tomorrow's a new day. I'll get up in the morning like today didn't happen. You've got to have a pragmatic approach to the markets, because you can't let past performance, like you would get from a financial advisor. They will sell you a financial instrument, and they will tell you in the small print, it will always say past performance is no guarantee of future profitability. So they sell you on past performance, but in the small print, they always say it's no guarantee of future profitability. Now, from my point of view, I'm like, okay, I've just had a big red day, a big loss in the markets today. So that's fine. I'll come back from that, and I'll look at tomorrow as a new day. At the end of the month, I'll take that red day into consideration, because what happens is at the end of each month, I take cut of my profits, and I put it, a withdrawal cut from my broker, and I will redistribute some of it. I will spend some of it. I will use it for the cost of living, or whatever it is. But up until the 31st of March, it's fugazi fugazi. Quote your man from Wolf of Wall Street. It's not real. You know, those profits don't exist until I decide to withdraw them from my broker. It's fugazi fugazi. I might as well be trading paper money for all it is, because when it comes down to it, I, for example, in February, I opened a new account with Capital Markets, and I put 5,000. Well, just less than $5,000 into that after landing charges and fees and things. It was just less than $5,000, but I've traded that up to $110,000 at one stage. It was $110,000 up at one stage. So when I had the big loss, two red days in a row at the end of February, I can't start getting butthurt about losing $28,000 on a single day. I've got to take the step back and look at February and say, well, February was a good month because we made $74,000 in profit. So I took 50,000 for myself, and I started this month in that same account with just under, or well, like 29,000 equity. So the equity that we had, yeah, we've lost a lot, but we were 49,000 up on the month when we closed the business on Friday. We've just lost 30, so we're still 19,000 up. You know, I'm still, if I decide that, okay, I'm not trading for the rest of the month, I've still had a profitable month. I can take 20,000 out for me as my wages for the month and do whatever I want with it. And I don't have to worry about it, even though I've had a big red day. Now, when I look at the statistics, that big red day will impact my statistics. And it basically, that gives me a kick in the rear end to say, Tony, pick up your trading game. You're getting off your game. You're getting too cocky, or you're getting sloppy with your risk management. And if I'm being honest, a little bit of both. February was the reason I'm getting cocky is February was a very good month. Wasn't my biggest month in terms of profitability. I had a better month in January, but to take an account from $5,000 and finish the month in 19 trading days, because there was only 19 trading days in February. In 19 trading days, to finish it on a profit of $74,000, an equity of $79,000, is a phenomenal achievement. And I look at that and I thought, okay, Tony, you're better than all these other 1%, 5%, 15%ers out there. You're so good, and you start to get your ego. And the worst thing you can do with trading the markets is have an ego. Now, I'm human, I have human emotions, and I'm as susceptible to my human emotions as the next man. So when you start to approach the markets with a bit of an ego, what do? They humble you. The markets will come, they don't care about your feelings, they don't care about your ego. The markets will come back and they will bite you on the arse and tell you, look, you don't control the markets. You know, you're not as good as you think you are. And ultimately, today is another measure of that. Now, I had two red days at the end of February. I had a small red day first week of March, first Wednesday. I had a bigger red day last week. I've had a huge red day this week. Now, did I stop trading on Thursday because I had a big red day on the Wednesday? No. Did I change my style of trading? No, I was just a bit more careful about the trades that I took. I wait for the setups. Now, today I went in El Indo. I jumped in El Indo because I believed my own hype, and not just in terms of my own capabilities. I believed the hype in terms of looking at the details around Indonesian energy and how it's a small float stock, so it's going to move volatile. You know, it's a huge amount of volume on a small float stock causes volatility. But then I look at the short interest, which it didn't have that much short interest a couple of weeks ago. So it's like 49% short interest. If that goes above $30, it could explode. It's a powder keg waiting to be lit. And I still believe that. But I jumped in expecting it to break $30 and all the shorts to start covering, and they didn't. And that was my fault, because I tried to read into the market what wasn't actually signaled to be there. So I'm based in Ireland. So, you know, red days happen. But for anybody on the stream that's thinking about getting into the markets, and they keep asking me, saying, Tony, would you recommend I get into the market? Or what do I need to do to get in the market? What do you think I should put my money into the market? And all this kind of stuff. And they get shocked when I say, don't do it. This is why. Because 85% of people that get into the markets lose money. I say this time and time again, every single day that I'm trading. The majority of people that get into the markets lose money. And if me, as what I consider myself a profitable and experienced trader, can lose so much in a single day like today, that should tell you, as a beginner trader, that the chances, the odds are not in your favor when it comes to being a profitable trader. So, by all means, learn how to trade. You can take my course. That's fine, $150, and I'll give you some one-to-one mentorship as part of that. By all means, take my course. you don't want to pay $150. Somebody, trolls on the thing, which I like the engagement. It's good for the algorithm and stuff. The trolls on the TikTok that coming on board. They say $150 is too much. Well, there's a reasons why you charge $150 for that course. If you think $150 is too much to educate yourself into the markets and trading in the markets, then the likelihood is that you're not the type of person that should be getting involved in the markets in the first place. Because if you're not prepared to spend $150 in the market to educate yourself on strategies and discipline and risk management, then you're going to try and get in with less than $150 and hope that you're going to make a living. Come on, let's take a reality check here. Let's just have a reality check. If you're getting into the markets with less than $1,000, £1,000, €1,000, whatever your denomination is, if you're getting into the markets with less than $1,000, you're playing pocket money games. Okay. You can open a small retail account for $50, but you're playing pocket money games. If you think you're going to earn a living with $50, trading $50, it's not going to happen. You might get lucky. What you're doing is you're playing lottery games, because you're going to put that $50 or that $100, $150, and you're going to put it on one play. And if it goes your way, you're going to think you're the dog's bollocks, because you might get a 20% gain on a given day or a 30% gain on a given day. And you think, shit, I had $150 in this and I've just made $50. I am the dog's bollocks. Tony doesn't know what he's talking about. A realistic goal is you're going to be looking at 2.5%, maybe 5% gain on a given day. There's a reason why the SEC and the authorities in the US recommend to do day trading, you need to have at least $25,000 in your account. There's a reason for that. And whilst it might not necessarily be fixed, babysitting a little bit, obviously, but if you've got less than $25,000 in your account, it's very difficult to be consistently profitable. You have to have the discipline to trade small and grow your account. Small wins, consistent small wins. Profitable day traders are not looking for the home runs every trade. They're looking for $100 here. They're looking for $150 there, $200 here, $350 there. And when they take a swing for the fences, occasionally by looking for the base hits, they'll get a home run. And that's what was happening to me last week. The base hits, I get the home run. But this today, I swung for the fences and struck out. Three strikes, and I'm gone. So that's what happens. And it does. It happens time and time again. And the only time that I would swing for the fences like that is when I do have a cushion on the equity. I have, coming in $78,000, $79,000 worth of equity. I can afford, because, as I say, the mentality is transactional. I can afford to take a big swing. If I have a big loss, I change my mindset slightly and I go back to base hits. It's great if you can get those home runs, but let's concentrate on being consistently green. If you're consistently green for $500 every single day, on average, across any given week, that's going to make you $2,500 a week. That's 10 grand a month. That's a six-figure income. Now, ask yourself a question: is a six-figure income enough for you to live on? Is that a good $120,000 a year? What's that? $120,000, €110,000, £100,000. If you can live on a six-figure salary, then all you need is $500 a day, $500 a day. So why are you swinging for the fences just because you've got a big equity? Now, I can come in tomorrow and today's finished, but I'm kind of rehashing this over and over for the sake of the stream, because I don't want people to throw money at the markets needlessly. I got into this, and you guys have been on this stream and you've been keeping me company, and trading in your home, in your home office or whatever it is. It's a lonely job. You're interacting with charts and scanners and numbers. It's not people, there's no people connection. So the stream here was it's good for my mental health to have so many people on the stream that I can actually interact with, you know. So that was why I originally started streaming my trading. It was more for company than anything else. Then I got the demand, and I could, you know, show how many comments and emails and Instagram direct messages and what have you, asking me, how do I get into it? How do I do what you do? Can you teach me? And all this kind of stuff. And yeah, I can teach you. That's why I built the course. And I built the course over the space of about 3 days, 4 days, then recorded the content over the space of the remaining week, and then published it a couple of weeks ago, a little over a week ago. So it's available for those who want to learn my strategies and the way I do it. If you don't want to learn off me, I learnt myself. I'm self-taught. So if I can do it, so can you. And I didn't pay anybody for a course. So if I can do it, so can you. If you're patient enough and you're willing to do the research, read the books, watch enough videos on YouTube, practice enough in a simulator, and I emphasize that bit, practice enough in a simulator. Do not put money into an account until you can prove yourself to be profitable in a simulator first. 100%, okay? So practice in a simulator. Once you get good in a simulator, don't just jump into trading with a broker and putting money in it, because you'll lose money. You will lose money to start off with, okay? Not only you've got to account for the spreads, you've got to account for the commissions and any ECN charges or any other kind of transaction charges that you're getting on a daily basis, which eat into your profits. But more importantly, it's the emotional side, okay? It matters more when which bookmaker is it that says it? It matters more when there's money on the line, okay? So if you're talking about, you're going to risk, you start off month one that you've got you open your broker account. Month one, you might want to be risking $25. But your target to earn is $50. That's on a daily basis. You start off small. You might put $500 into your account, $1,000 into your account, whatever you can afford to lose. That's how much you should start with. Then forget the commissions and charges piece for a second. Let's just look at the trade profit and loss. You want to make $50 so you can risk no more than 25. You do that consistently for 3-4 weeks, and show that you can do that and be disciplined in cutting your losses. If you can do that, then you increase the goal. You say, okay, well, I want to make $100 a day. So I'm going to be potentially risking $50 a day. So $100 a day, if you can consistently do $100 a day, that's $500 a week. That's $2,000 a month. That's $24,000 a year. Okay, you're consistently doing that if you want to kind of slowly increase. So you move from $100 to $200. So my goal now daily is $200, but I'm risking $100 on a daily basis. You consistently $200 a day is $1,000 a week. That's $4,000 a month. You see how it's slowly you build it up over time. So am I bullish or bearish the rest of the day? I'm taking the rest of the day off. So that's me done. I've hit my max loss on the day, and when you hit the max loss, it's time to call it quits. The first 60-90 minutes of the market for me, different people are different in terms of the trading strategies or trading style. Some people, that first 15 minutes of the market is too volatile for them. They can't do it. They can't do it. Okay. So what I tend to do is I recognize that if I've lost money in that first 90 minutes of the market, the chances of me actually making money for the rest of the day are exponentially lower. So I'd rather just quit. In fact, what's more likely is I'll end up going chasing on lower volume, lower volatility, and I'll end up going chasing moves that I shouldn't be chasing and end up digging a bigger hole. So it's better just for me to just walk away. So that's what I'll do today. It's a red day with $30,000 in the hole for the day. So I'll call it a day today, and tomorrow, who knows, we might make $30,000 back. So Last week we made $36,000 in a day on Indonesian energy. Today we've lost 28,000 on into 28,000 or whatever it is, 27,000 or whatever. So easy come, easy go. Big easy Fugazi. Again, so firefighter, you're absolutely right there. Well, you're not right in that it's just gambling. It's that the volatility is so high, so a lot of people can't see the patterns and can't trade the breakouts at the right. It's too much of a risk. They can't manage the risk in that first 15 minutes because of the volatility, and that's why they'll cut you'll get a move up to the upside, and they'll go long on the position for out of the gates. They'll move to the upside, and then they'll get a quick flush. And then they'll sell for a loss, rather than recognizing that quick flush is people taking profits, and maybe it's an opportunity to buy a dip. So there's a number of different things in terms of the patterns and setups that you look for as well. But if you're going to lose money in that first 20 minutes, don't trade it. If consistently you lose money in that first 20 minutes, don't trade it. Yes, 30,000 today, 30,000 in the red today. So yes, you didn't miss here. Can I give an opinion about an upcoming recession for a day trader? Okay, so sideways choppy markets are markets that we can be profitable in, we can make money in, but they're more difficult to trade. Okay. Recessive markets are markets that are on the downturn. So there's two things you can do in a recessive market as a day trader. If the market's moving up or it's moving down, it's moving. And that's the volatility. So you can maintain the long bias, which is what I tend to do. And even though the market's trending down, there's usually one stock or one ticker that is having a good day for whatever reason. It could be a pharmaceutical stock that's got FDA approval or clinical trials, positive clinical trials or whatever it is. It could be a technology stock that's got it's had good earnings reports, or it could be an engineering stock that's got a patent granted or something. So there's always at least 2 or 3 stocks on any given day that are making good moves, they're having a good day. So we look for those, and we're not the only ones that are looking for those. So it doesn't matter whether the market's trading up. If the markets are in an upwards trend or a downwards trend, it means that the markets are trending, and there's always stocks moving with the trend, and there's always stocks moving against the trend. So we can find opportunities to trade. It becomes more difficult when the market's trading sideways. For me, at least, it becomes more difficult when it's just trading and it's a choppy. But then you do find stocks that are moving, but very often in those kind of conditions, they'll move, but they won't hold the gains, or they'll fall and then they'll pull back. So it becomes a lot less predictable in terms of the breakouts, pattern breakouts, and things like that. So a bearish market, as a day trader, I welcome it. As an investor, because I'm an investor too, as an investor, I see if I can time the bottom. Invariably, I won't, but I'll be buying the dip. Whatever positions I'm in, at the end of this month, I'll take whatever profits I've got, and I'll be adding to my positions. And that's the way, from a long-term investment perspective, that's the way you should be viewing your long-term investments. Whenever there's a pullback, it doesn't matter how long the pullback is, because that's all a bear market is an extended pullback, an extended correction. Because you look at every bear market, every recession that we've ever had in history, the market is always recovered, whether it's a month later, a few months later, a couple of years later, the market's always recovered and gone on to all-time highs. And it will continue to do that. So long-term, the best way of looking at it from a long-term investment perspective is discount buying, discount shopping. From a day trading perspective, you're still looking for the volatility and the volume. Nothing changes. It's just the other way you can look at it is you might find, and certainly at the moment it is the case, you might find there's more opportunities to go short side, which means instead of going long side where you buy something low and wait for it to move higher and sell at a profit, you actually sell it before you bought it. You borrow shares, sell them, and then wait for it to drop further before buying it and covering that position. So that's the short side. It's exactly the same strategies that you would use in the long side, just inverted. So the gap and go strategy, you're looking for the gap down and fail, or the gap down, go down. If for the top reversal pullback strategy, you're looking for a bottom bounce strategy. So it's short strategies are just as effective as they are long. Just more people have a long bias. It's a psychological thing. We want to buy stocks and see them increasing so we can get the gains. We're looking for that momentum, but you can get momentum to the downside just as much as you can get to the upside as well. So bear markets, there's opportunities to make money as a day trader. It doesn't really make much difference. As long as the markets are in a trend, you can find stocks either with or against that trend. So yeah, let's have a quick look at Trading View. So I'll pull up my Trading View rather than pull up my trading software, because if I pull up my trading software, the likelihood is I'll end up taking a trade. So I'll do Trading View. So let's look at the SPY. The SPY's down. Oh no, it's up on the day. Okay, it's up on the day. It's moving on in upwards direction. Let's have a look at it from a 5-minute chart perspective. So on the 5-minute, yeah, the S&P 5, the wider market, the SPY is having a good day so far. You can't really grumble at that. What about the Nasdaq? Okay, so Nasdaq is not having as good a day, but it's doing okay. No, it's up on well, it's currently about break even on the day. So it pulled back and it's ranging up and down. It's an upwards trend, but it's currently about break even on the day. So yeah, go figure. Commodity markets, your gains. Okay, that's fine. Look, Passion X Man. Being honest is the least that you deserve. I mean, I don't have to. Actually, somebody said if you're earning so much money day trading, you don't need to sell a course. And my answer to that is, with that kind of attitude, with that kind of mentality, no successful person will ever sell a course, and nobody will ever learn off a successful person. And there'll be no best-selling books about how I made my first $1 billion or anything like that. No best-selling books saying how to successfully trade the stock market. None of that. Nobody will learn off anybody successful if that's the mentality that people have around other people that are successful, that want to, monetize that knowledge. And see, anything that you're good at, and I use this analogy with my dad. Some people call it a shit analogy, but I stand by it. My father being a qualified chef and not cooking at home, and his excuse was if he's cooking, he's trained, he wants to get paid for it. So it doesn't matter what your expertise is. If you've got an expertise, if it's how to play fidget spinners, you can monetize that. You can make money out of that. Particularly in the digital world that we live in now, with social media platforms, all you need to make a good living on the internet is expertise in a certain area that's in demand. And it doesn't matter what that area is. If it's something that you're interested in, they're pretty much guaranteed to be someone else is interested in it as well. It could be Pokemons. Do you play Pokemon Go and you're an expert at playing Pokemon Go? You've got this undefeated pack of Pokemons, whatever it is. You can monetize that. You can put it on. You can stream it on Twitch. You can stream it on your social media channels or whatever, and monetize it. And people are doing that. Just go to Twitch. People are doing that. So if you've got expertise in any particular niche and you're not monetizing it, you're missing out. Are you purely price action, and what broker do I use? Yeah, so from a day trading point of view, absolutely 100% price action. If you talk about indicators, which are lagging, all the technical indicators you get on the charts, and if I pull this up here for can't see that for some reason. So you'll see this on TradingView. You click on indicators, and there's literally hundreds of different indicators that you can use, and you can put them all on your chart. And if you want to put them all on your chart, you're just going to have a messy chart that's overcomplicated and complex. So the majority of these, if not all of them, are lagging. What that means is that they're taking past price action and creating some kind of algorithmic, making some algorithmic sense about it. So past price action is no indication of future action. So I'm just looking for patterns, and historically I'm looking for patterns that other traders are looking for at the same time, because I know these patterns will typically, when they're traded on volume, they will typically break in a certain way. So if we look for a flat top pattern, that flat top will, and you've got very often an ascending wedge. So a flat top pattern with higher lows will typically break upwards at some stage. So you're just looking for that break upwards, but you're not the only one. You know you're not the only one if it's trading on volume. So when it finally does break that resistance level, purely on price action, when it breaks that resistance level, you jump in and ride the momentum up. But you're one of thousands of other day traders doing exactly the same thing, and that's what makes that particular breakout predictable, and that's what makes it ride up, because everybody else is trading the same strategies. So when I say that everything that's contained within my course is freely available on the internet, it's because everybody's trading those same strategies. You know, and the more people that trade those strategies, we want the more people to trade them, because the more people that do, the more that the price action actually respects those movements. So the reasons that you get key areas of support and resistance is because psychologically that's where people start taking profits, or that's where people are buying in, or whatever the scenario may be, or covering the position. So it's all psychological, and you've just got to be able to identify these levels from a technical analysis point of view. So I'll just bring this up. That's not the right one. So if I bring this up here, I'll get rid of these. So yeah, I mean, like I say, the technical indicators on this are just there's loads of them. Then you can get, I mean, you can create your own scripts. You've got various strategies that you know, if you're relying on an automated strategy for the markets, my advice to you is don't trade. If you're relying on somebody else to give you signals and tell you when to get in, don't trade. The only way to be profitable in the markets is by learning how to do it yourself. If you don't learn the information and how to do it yourself, you're never going to be profitable, because ultimately the information that you get secondhand is going to trip you up. So if you try and copy me blindly, for example, and you do it on the wrong day, you're going to blow up your account, because you don't have the equity or the buying power that I have. You don't have the cushion that I've built up over a course of time that I have. So you try and follow me blindly. Like today, for example, if you jumped in with Indonesian energy at the same point that I did, you would have blown up your account. You would have lost your money. The trick is learn how to do it for yourself. And then it all comes down, after that, it comes down to psychology and discipline. So actually, they don't. That's just it. So when the markets crash, they do so violently. They don't. It's only because they do, but it's no more violent than when they go on a bull run. So if you look at let's look at the price action of the SPY, for example. I'll leave the Nasdaq up here. Let's change the let's look at the weekly, okay? So let's look at how the price action here on a weekly basis from last year. Okay, it went up. So what you're saying, when the markets crash, we'll go back to August 2020. Markets pulled back and pulled back quite violently in August. So then we get into September. Then we start moving back up. We get to this one in November, and that's a violent push to the north side. Okay, it's a violent push to the upside. So if I look at the it went from, so this is the QQQ, which is Invesco Trust. It mirrors the Nasdaq, and all the markets are the same for this. So this was a 25-point move to the upside in a week. 25-point move to the upside in a week. A huge move. 25%. Oh no, 10%. So it's 25 points. Then I look at what's the biggest pullback we've had so far. So I'll come back to January and 28%, 28 points. So it's down. You know, it's 28 points to the downside. So what I'm saying there is that the volatile moves to the upside are no smaller or bigger than the volatile moves to the downside. You're in a bull run, you're in a bull market, you get big moves to the upside. You're in a bear market and a downturn, then you get bigger moves to the downside. It's horses for courses. Both ways can be volatile. But I wouldn't say that bear markets have a particularly more violent move than bull markets. It's pretty much identical, but just the inverse of. The thing is, a lot of people new to the markets panic when they see those volatile moves. People who are experienced in the markets rub their hands because they see those volatile moves as opportunities. So if the more volatility that there is in the market, the more we can take advantage of that volatility. What do I think is the most important chart pattern for a bullish movement? Well, I don't think there is a particularly most important chart pattern for a bullish movement. There's a number of different bullish signals that you can get from patterns and things. If you get a bull flag, watching a bull flag, and because what tends to happen when you get a bull flag is there's an extension bar to the upside, which triggers off the it's usually in an upwards trend anyway, but it triggers off and it's on high volume, and then you'll get a pullback, which is on lower volume. And very often what you'll find is that you'll get higher highs and higher lows, but it becomes a bit of a either a downwards channel or a downwards flag, triangle, if you will, a descending triangle. And when it then breaks up, it breaks with huge volatility. So a bull flag is a very good bullish pattern to take advantage of as a long biased day trader. Those flat top breakouts for me I've found as being one of the most profitable, because as long as you're getting that ascending wedge and you're getting that key level of resistance, you can actually watch it on the level 2 as well. If you've got a buyer or a seller or multiple sellers that are creating that resistance to that key level, and you know you've got a lot of volume coming in, you know that there's a lot of other traders trading that particular stock, the chances are once you break through that particular resistance level, you're going to break through, and there's not a lot of resistance above it. There's a window above it. That's really what you want to be looking for. Is there another line of resistance above this one, or is there a window to the upside? Can we go on a significant move upwards? So that's what I look for when I'm looking for bullish patterns like the flat top breakout or bull flags and things like that. Is what's the potential to the upside? Is there resistance nearby? Is there a significant psychological level nearby, or do we have blue skies? That kind of thing. Well, thanks for the weights. I'll work out with them later. I do trade crypto. I made quite a bit on Shiba Inu last year. I made a little bit on Doge, but I was a bit late to the party with Doge, which is why I got in on Shiba Inu. because I could see it was being touted as the Doge killer. But then when it started to gather momentum, before it hit Coinbase, when it started to gather momentum in terms of the community itself, I jumped in. But crypto, I don't day trade crypto. I'll swing trade crypto. Some of the more obscure coins, I'll swing trade them. But I do have long-term holdings on 4 particular projects that I'm fond of. And one of them is Cardano, and I'm very bullish on Cardano. And a lot of people are like, Cardano, what are you talking about? It's just and I look at it, and it has pulled back quite a bit, and it's kind of sad reading. But I'm still bullish on the project. I still think it has a lot of potential to the upside. So I'm still holding my position. I'm still averaging and dollar cost averaging on my crypto position. I don't day trade it because. And I had this brief conversation on someone else's TikTok channel over the weekend that they commented that day trading, crypto is best for day traders. I'm like, no, it's not. And the reason it's not is whilst you can get volatile moves, intraday, you don't get the kind of volatile moves that you can in stocks. And he's like, well, the spreads are better. I'm like, well, no, they're not. In some brokerages like eToro, maybe they are, but in most brokerages they're not. So you get a highly traded stock, and the spreads tend to tighten. Most crypto, the spreads are, because it's the volume isn't there for crypto either. So any kind of volatile moves you get in crypto are usually the pump and dump moves, or they're spread out over a larger period of time, a longer period of time. So you can get good swing moves with crypto that perhaps are not as trustworthy with low cap stocks that you can get with stocks and shares. But the only time you're going to get a crypto that moves 750% in a single day to the upside, it's not on one of the major exchanges. So you've got to get in early. You've got to buy in early before it hits the mainstream, and then you can get big moons. But that's not trading with a strategy. That's buying a lottery ticket, and that's why I don't trade crypto on an intraday basis. So there you go. Vault. Let's have a look at Vault. I think this was one from earlier. No, there's no volume. There's no volume there. There's no volatility there. There's no volume there. It's basically, this is an acquisition. The Vault has agreed to an acquisition, and that's why it gapped up. So it went from $3 up to it's going to be sold for $6 a share. It's gone from $3 overnight to $5.90, $5.91, and at the moment it's trading flat at $5.91. There's no volume, there's no volatility, there's no trade there. If you do have shares in Vault, if you buy a huge bulk of shares in Vault today, you might make 7-8 cents on the share, you know. So I don't trade pairs, I don't do Forex. I trade either with Interactive Brokers, IBKR, or I trade with Capital Markets Elite Group, CMEG. So those are the two brokers that I use. I have used eToro, but not for day. I'd use them for day trading to start off with and lost money. They're not a day trading house. They don't carry all the instruments. They have a subset of instruments. The spreads are not as good. And it's market orders only. So I tried to trade GameStop with them last January when it first broke, and lost money. And that's why I got off the platform, because it was like, at one stage they stopped me from buying, and they actually refunded me $3,000, funnily enough, because I tried to buy and they wouldn't let me. So I could prove what my position was and what I was trying to achieve, and because they froze my ability to buy, I could sell, but I couldn't buy because they froze my ability to sell. I was like, look, you either refund me the full amount that I've staked, or I'm not I'll take you to court because I actually lost money as a result of it. Love back to Leash. Well, I traded with eToro because it was they billed as free commissions. Okay. Now, what you don't pay in commissions, you pay for the order flow firstly, and you pay on the spreads. So it's not free, really. You're not getting the tight spreads, and your orders are routed via a favorable market maker of their choice. That's the thing with eToro. Now, eToro's got a good marketing platform in Europe, and that was one of the reasons I went with them. I just opened the account with them. It was probably the first brokerage I opened the account with when I first got into day trading. But the other thing is that people who say, why are you using eToro, are usually the ones from the US or Canada, where you have a lot of options when it comes to retail trading, retail brokers. The options in Europe are limited. There's quite a lot of brokers will allow you to open accounts for trading Forex or CFDs and spread betting, which are usually the bookmakers that do the spread betting and stuff. Or trading Forex is another one, and they'll give you the MetaTrader 4 or MetaTrader 5 to trade the Forex and stuff, and they'll give you a subset of equities to trade with. But they won't carry the equities that I want, so you're not getting the full order book. So to get a broker that carries the full order book in Europe, there's a handful that you can that retail traders can use. So 212, there's a trading 212, for example. I've heard good reports. There's a waiting list, as far as I'm aware. Still, my name was on the waiting list originally, but I kind of went away from them because I wanted to trade. Interactive Brokers, who I use. There's a couple of others that you can use in the UK, but otherwise, you look for an offshore broker like the likes of what I use with Capital Markets. And eToro is the thing with eToro that I liked is that they give you the paper trading account. You get like $100,000 paper trading account. And then you can start charting and you can start practicing reading charts. On the downside of that is that you don't carry all the indicators. So you'd be better off just downloading the TradingView app. And although you can't use that for paper trading as such, but you can use it for the charts, and you can use it to look at the price action on any given day. And learn how to trade from a technical analysis perspective without actually having to open a brokerage account. So eToro's got some good points, but they're not for day traders. Yeah, MetaTrader 5 is better than MetaTrader 4. I'll give you that, but it's still not. It's not ideal for day traders. I've tried it, and it can be effective with the right strategies, but it's nowhere. It doesn't even come close to Dash Trader. It doesn't come close to Sterling Trader or Lightspeed or any of those other direct market software. MetaTrader is a poor cousin by comparison. It's not as configurable. I think one of the advantages that you get is that you can buy from the chart itself. Buy and sell actually on the chart itself as opposed to from the montage. Not sure if that's a good thing or a bad thing, but that's a feature that I kind of like with it, but MetaTrader is not one of the best platforms for me. Certainly, I don't know any profitable day trader that trades with MetaTrader. Most of them are either using Sterling Trader, Dash Trader, Lightspeed, or something of that ilk. And what you tend to find is that you'll be charged in most cases. Now, I've got a quote from Sterling Trader. So this is interesting. Might be interesting to a lot of people on the chat. I've got a quote from Sterling Trader that they will allow me to provide my students on my course A 50 student minimum is what I've got, but they will allow me to provide them a simulator, Sterling Trade, a direct market access, so real-time market access, and they will charge me a very small nominal fee. What I've been looking at there is that, okay, they will charge me like a third of what the price is if I go and buy it normally. So I could subscribe into that bulk and then either give that as part of the package for my students, or give that at a very subsidized rate to my students. And that's what I'm looking at the moment. So as soon as I get 50 people signed up for the course, I'll be engaging with each and every one of them. And if they see that, yeah, a simulator like that will be beneficial for them, then I'll go ahead and I'll order the full package and do that. That's going to take that's going to cost me about $1,200, $1,500 a month for me to have that facility with Sterling Trader available to me. So I may well do that. I will take the dog for a walk, and I will be recharging in just a second. So absolutely. Now on Twitch, Smarty Cats says, wants to know, is it feasible to get started with little capital? Yes, it is. Absolutely. You've got to, it's all relative. So if you've got an account and let's say $1,000 is what you've got now, you probably will get a maximum of like 2x leverage on that. So you'll get about $2,000 worth of buying power, maybe. If you've got $2,000 worth of buying power, is it reasonable for you to, or feasible for you to make $50 a week with $2,000 buying power? And I would say, yeah, I think that's, or $50 a day, should I say. So I think that should be the goal that you would look for on that basis. So if you opened an account with a broker and you got 2 times margin, because the margin usually kicks in after about $500, and then it's usually about either $2,000 or $2,500 that you get the full margin, but you get like a 2-to-1 on the earlier margin. If you've got $1,000 in your equity, and I would say it's difficult to trade with less than that, what you're probably better off doing is just using, if you've only got $500, is pay for an education, invest in an education, subscribe yourself to a simulator, and maybe buy my course, plug, unashamed plug there, or a course of a similar value, and a simulator, let's say it's going to cost you between $100 and $150 for a month. Let's call it $100. My course is at $150, so that's $250 in your first month. It's another $200 for the next 2 months because you've got the simulator. So if that's all you're doing, you take the free journaling option with something like TraderView to log all your trades so you can analyze them better. So you take the freemium option there. You're not earning anything, so you can upgrade that at a later date if you need to. So that, altogether, that's going to cost you, what, $450 for 3 months of action, of practice, of learning how to do it, learning the strategies, learning the markets. So I would take $500 and I would learn how to do it first. Save up. Once you've got $1,000 saved up and you can afford to lose it, you're not taking it somewhere important. This is spending money. You decide, okay, instead of going out on a Friday night and spending that 50, 60 quid on a night out with the lads, I'll just go out Saturday night alone, and not Friday and Saturday night. I'll just stay in and watch the footy on Friday night football or whatever it is, and you put that 50 quid away and do that for 3 months. So that's what, 13 weeks, 50 quid. So that's 700, almost 700 quid that you've saved, that you would have just spent on booze. That's one way of looking at it. So build up, try and get like $1,000 worth of equity. Get a simulator, whether it's with your broker and they will give it for free, but they might charge you data fees, or whether it's just a simulator on its own, and practice the strategies. Then once you've then proven yourself to be profitable, if you can do that consistently, day after day, week after week, then you know that risking a little bit, you put your $1,000 in there, you're risking $25 a day. You lose $25, you stop. You do what I've done today. You stop. You shut your platform down and you walk away. If you've got a risk versus reward of say 2 to 1, so you're gaining $50 a day and then you stop. I know you might have some days where you'll be on a roll, but what you do is, to start off with, you discipline both ways. So you hit your daily goal, so you go above your daily goal. You might get $60, $70 or whatever it is. You don't go for more. You cut it there. You've hit your goal, leave it. Come in the next day, daily goal $50, $50, $50. Now, if your max loss is $25 on the day, then you're making $200. Let's say that you have 4 profitable days and one that's not so profitable. You're making $200 and only losing 25. So straight away, you're $375 up on that week. And that goes on towards your capital. So you started off with $1,000 at the beginning. At the beginning of the week. At the end of the week, you're nearly $1,400 up. So the following week, you can do that again, another $50. So you do the same thing, and you another $300, $350 or whatever it is on top of that. So by the end of the first month, you should be up at what, $2,000. Then you can, once you've got to $2,000, you've doubled your equity. You can, let's say, well, I've spent a month. I'm consistently profitable. I'm 4 out of every 5 days. I'm green. I'm making profitable moves. And the only difference between me and you at that stage is sizing. So I go in there with a big account and I've got $70,000 worth of equity. I've got 6 times leverage. So I'm trading with $500,000 worth of buying power. So I can take bigger size. I can take 10,000 shares. I can take 15,000 shares. Whereas you might want to say, well, I'm taking 150 shares. I'm taking 250 shares. And it's the only difference is the sizing, because you take bigger size and you make bigger wins. So you increase it again. The following month, instead of having a daily goal of 50, you have a daily goal of 100, until a point where you're comfortable and you've got an equity that you're able to use the 4x leverage or 6x leverage or whatever it is that your broker's giving you. And then you can take a bigger swing because you've got the buying power there, not necessarily the equity, but you've got the buying power. So you can risk a little bit more. But at that stage, it's important not to get too cocky and stick to the strict risk management principles and continue with that kind of strategy that, okay, I want to be making $250 a day. So I want to, what's that, $1,250, that's $5,000 a month. $250 a day, that's $5,000 a month. Are you earning $5,000 a month right now? Is that what your 95's giving you? $250 a day is all it takes to earn $5,000 a month. That's $60,000 a year. Most people aren't earning that. The majority of people aren't earning $60,000 a year. So just bear that in mind, that to make $250 a day off, say, $2,500 equity, that might sound like it's a 10% gain every day, and it's asking a lot. But you're not factoring in the leverage. So let's say you're getting 4 times leverage on that, then you're only actually asking for a 2.5% growth on the buying power. Now, it's being aggressive to start off with, which is fine, but it's more than realistic. If you adopt the right principles, $2,500, once you grow your account slowly up to $2,500 or above, then $250 a day is a realistic goal to be setting. Once you get consistent to doing $250 a day, then move it up, $300 a day, $400 a day, and et cetera, et cetera. And then by the end of the year, you might be doing $1,000 a day. $1,000 a day, that's 20 grand a month. 20 grand a month. That's $250,000 a year. How many people on this stream are earning $250,000 a year? Aside from, the obvious, probably very few. So that's how you've got to scale up slowly. And it's like when you're taking trades, scale into them slowly, scale up your account slowly. Options on opinion on Facebook stock, you're down 40% and you're a bit depressed. Yeah, I would be too. Facebook hemorrhaged. Facebook right now, I'll pull it up on the on here. So FB. So on the 5 minute, it popped up this morning and then sold off. So that's no consolation for you. Look at the hourly. Oh God, that's not good. Look at the daily. So it's so it gapped down, that huge gap down where it lost like half its value in the space of a day. Or I think a third of its value in a day, and then half of its value over the course of the following week. It's still selling off. It is still selling off. So if you look at the pattern on a daily basis, looking for a bounce right now, there is no reversal signals. We're seeing a little bit of support here at kind of 180, 185, maybe. A little bit of support there at 185. It's tapped that about 4 times, but it's on its way back down. So if it falls below 185, what's the actual low here right now? So we're looking at 186 is the low at the moment. So if it goes below 186, I can see it taking another plunge. I can see it another 25% off where it is today. I could see it going another $25, $30 down. Facebook's not looking good at the moment. It's not looking good at all. And if you're in it, then look, I'm not going to offer financial advice, but I would have cut my losses after that first week for sure. Probably after that first couple of days. I couldn't. If I was in it, the bag holding up at $300 and it's now trading at 187. That's not looking good, because where is it going to get the bounce from? What kind of catalyst does Facebook need? What kind of good news does Facebook need to recover from this? They are the pariah in the stock market at the moment. In the technology space, everybody hates Facebook. Everybody hates them. So what point do we say enough is enough? I wouldn't say average down, because right now you could be set to lose even more. There's one of two things that you can do with Facebook. In my opinion, this is not financial advice, but there's one of two things that you can do. You can either cut your losses and sell your position now for a loss, and hope that at some stage you're going to make that back somewhere else, or you can forget about it. Just go long term. Think, okay, well, I'll forget about my Facebook holding. I'll just move on and I'll start investing in other things, and just put that to one side, the back of your mind, in a mental cupboard at the back of your mind. You've got X amount of Facebook shares, and if it keeps dropping, it doesn't matter, because you're never going to sell. So at some point in the future, you might turn around and say, "Oh, I had Facebook shares. Meta's it's called Meta now, but how much is it worth?" And it might be worth $5,000 a share. You think, okay, great, shit. How much is my holding? That's the only two options. You either cut your losses now and hope that it doesn't reverse and you end up kicking yourself, which is probably what I would be doing, or you just forget about it and think long term, big stocks. What's the future of Facebook? Is it going to go away? Is it going to come back? It's probably not going to come back in the next month or so, but long term, is it going to come back, and how long is it going to take to come back? So those are the two options. How can you purchase your course? It's relatively easy. So I'll show you again for the uninitiated. So the course, flip the camera, go into my profile. If you swipe left, go into my profile. That's my face. You'll see this link. You'll see these little arrows pointing down to a link called the TikTok Trader. So this link here, click it, and it opens up a link tree. You click the very first one in the link tree, and it takes you to the course. So the course is called Day Trade with Tony. Okay, you can get in there and you can choose your option. If you take the 150 bucks, 146 bucks option, which is about 119 pounds, I think it is, about 135 euros, whatever it is. If you take that option, you get a 90-minute one-to-one session with myself. That's included direct coaching and development. If you take a longer one, take a longer period, then you actually get more. You get regular periods, one-to-one sessions on an intermittent basis. If you take the annual session, then you get it on a weekly basis. You get weekly sessions, and we go over trades that you've taken, whether that be in a simulator or in real time. We go over trades that I've taken. We'll go over strategies. We'll go over the whole piece. So that's how you do it. So once again, into my profile, click the link. I'm not sure if TikTok likes me saying that. So click the TikTok trader in the tree, the first one, and then you go into, it brings you to this, and that's where you find the course. Okay. Everything else in the trader, if you want to learn, if you've not got, so this is this is actually a good thing for you to have a look at. Okay, guys, and I'm going to show you this, and I'll put it onto my link tree for a reason. Okay. TradeNet Academy. Now I entered the last year twice. They ran the World Series of Day Trading last year. And the World Series of Day Trading, it was a free thing to sign up for, and they give you a paper trading account, and the winner gets, I think it was $10,000 or whatever it was, and it was just a bit of a gimmick. But I entered that, and what TradeNet do is they offer courses, they offer education, all this kind of stuff. They've got a YouTube channel every day as well. But what they do is they've got I've got two links here. This one's for crypto, and this one's for equities, stocks and shares. You click on that, it takes you, what they are is a prop company, a prop trading company, okay? So you can actually trade with them. Where are we? Give me funds for stock trading is what we're doing. Where is it? Where is it? Okay, so pick the package, okay? So it's down here. So you can either, for $350 US, it'll give you $14,000 live account, okay? You can trade that on the US stock market as long as you don't lose $700, okay? And you will keep 70% of any profits. What that means is it's not $700 a day, it's $700 total, okay? So your minimum account value cannot go lower than 13,300. So as long as your account is above 14,000 and consistently stays above 14,000, you can trade and share the profits with these guys here. And that's going to cost you 350 bucks. So that's a way to trade with a $14,000 account. You want to trade with an $80,000 account, which is pretty much what I was trading with today. The maximum loss that you can have, maximum drawdown, is 4,000. So they'll give you $80,000 to trade with, and as long as it stays above $76,000 in the account value, if you grow it to $120,000, then you actually keep 75% of the profit. So if you grow it to $120,000, that means you get $30,000 in your pocket. Okay, so that's 80 from 120 is 40, and then they take 70. They take 25. So you get to keep 75. Okay. Now, if you don't have 2,500 or even 350 to do it, but you still want to get them to stump up the cash for you to trade on, you want to trade with their money, not your own, then this is another option that you can do. You take what's known as the 10K challenge. Okay. Now the 10K challenge is that they will give you a simulator account, not a live account. They'll give you a simulator account of $10,000. Now the strict rules here is that you can only lose a maximum of $500. So it can't go below 9,500. If it does, the challenge is finished, you're done. The goal is that you need to grow that over however long it takes you to do it to $13,000. Now you grow it to $13,000, you get your choice of either $2,000 in cash, or they will give you this $80,000 live account to trade with. And again, you'll get the profit split 75-25 in your favor if you grow that to $3,000. So that's really an interesting option. Now that's $200. So if you don't want to spend $150 on my course, but you want to just get into the markets with a chance of getting an $80,000 paid account, try that. And it's a decent platform that they have as well. You can they'll allow you to configure it, to trade with it a couple of days beforehand, get used to it, and configure it to your own liking as well. So that is TradeNet Academy. That's the fourth one down. And there's a similar one for crypto. If you want to do crypto, they've got a similar situation with crypto. It's either a 60 for $2,200 to $60,000 live account. They will put up $60,000 for you to trade in, with a maximum loss of $3,600. But you've got to put $2,200 in there. So if you lose $2,200, you're still in the game, but you've lost all your money, but you're still in the game. So, but you need to grow that, okay? But if you just want to, again, for $200, you want to try your hand at trading, it's a good option. It's just as a practice in a live world environment. They'll give you a $10,000 crypto account for, again, it's paper trading, $200, and you're only allowed to lose $600, so $9,400 is the minimum account value, and you keep 70% of the profit splits. Okay, so and you get access to their courses and things like that, and they're a good outfit. They're actually a good outfit. Mayor he's Romanian guy actually, and he's on YouTube regularly and shows his profitability. He's a good guy as well. So that's just another way you can get into the markets without having to stump up loads of dosh. And if you want to trade Benzinga, then I've already shown you the Benzinga scanners again and again. That's Benzinga. Try it, click it for 14 days. So that's just another way you can get into the markets without risking all your money, if that's something you want to do. I've just covered how you get. How do I manage my tax? I let my accountant do that. I've always have a number cruncher to crunch your numbers. So I trade through a limited company or an LLC. It's a limited liability company, which reduces. Essentially what an LLC is. It's a pass-through organisation, or a limited company. It's a pass-through organisation. So I'm liable for the taxes as the owner of the company, but I can trade it as a company. Okay, and it allows me to either take a wage from the company. I'm not exposed. It reduces my exposure to tax and to any liabilities, and to any if someone wants to sue the company, I'm not going to be held liable for it and things like that. So there's a lot of benefits to actually setting up your own company, and which is why I say speak to an accountant. Now, there are other ways you can do it. You can set up your company. You can trade I'm based in Dublin, and I trade in Dublin. I've got a bank account, an Irish bank account. But, you can set up your company in an offshore location, like, say, the Isle of Man, where there is no capital gains. There's no capital gains tax in the Isle of Man. Same thing with the Channel Islands, Guernsey or Jersey or something like that. Now, if you've speak to an accountant and then they're not familiar with offshore company management and things like that, then don't go down that route. You might want to speak with somebody that's maybe an accountant in the jurisdiction where it is. So, for example, in the Isle of Man, you need two directors. So a company secretary and a director, that's fine. So I am the owner. I own 100% of my shares, but my accountant is the company secretary, and I pay them a fee for being the company secretary. And their location is my registered company address, not where I'm sat here right now today. So just speak to an accountant. They walk you through that, and they can help you with your taxes, and they can help you with company management and trading as a business and all that kind of stuff. Profit loss account. So sum of gains minus losses are simply withdrawals minus deposits taxed. So all your losses, all your losses can be offset against your gains. So what that means is that your net gains. So if I take a trade for when I made $36,000 with Indonesian Energy a couple of weeks ago, then I can offset the 27,000 or whatever it is that I've lost today against that 36. So my net gains is what I get taxed on, and it's the net gains that you get taxed in line with capital gains tax. Now, if you're holding a position, you're holding it longer than a year, it no longer qualifies as capital gains tax. So you can, now again, depending on your jurisdiction as well, depending on where you are, if you're in the UK, then, and you're trading CFDs, for example, instead of actual shares, which is a contract for difference, then that's or spread betting, because CFDs are they're classing it as spread betting, then you don't pay capital gains tax on that either. So that's why you need to speak to your accountant to see, are any of the instruments that you've traded CFDs, and if they are, do you have to pay tax on those? So you need to break it down. So I posted on the course. I think I've got my broker statements there, but you can actually drill into the broker statements, and you can get the I've got it based on daily profit and loss and things, but you can actually break it down based on the instrument itself, what the instrument was, the buy price, every single trigger, and every single sale price as well, because sometimes you get filled and it's across multiple price ranges. But if the instrument is a CFD, it might come under a different tax bracket to it being an equity, or depending on what financial instrument it is, or an ETF or whatever. So just check with your accountant if that's the case. I've not had a client want to physically come and sit in and learn with me and live in for 30 to 45 days, 45 boot camp training, 45-day boot camp training. But interesting, you know, it's something that maybe we could look at that. You know, get a good rate from one of the hotels, get into the IHG group or something, get a good rate from one of the hotels somewhere nice, and do a boot camp. I've no problems doing that kind of a live event training. That way we do the open. Maybe if I got someone else working with me to cover that, we'd do the open all together. We'd trade the open for a couple of hours, then we'd get into the education piece and do it as a kind of a seminar and things, whilst other people will be spending time actually trading other parts of or during the day or whatever else, learning swing trading, crypto trading. It could be a 45-day boot camp or a 30-day boot camp could be something I could look into in the future. My first registered tax year should be a good rebate. No, it won't. It won't. Absolutely not. Quite the opposite. So I'll be paying a lot of tax. I won't be getting a rebate from it. So this month is when I have to calculate my taxes for, but I won't have to pay. So I have to submit my reports. I've got my accountant's already got up until the end of February's reports. So I'll be submitting my broker statements and all my other bits and pieces the end of this month, well, the early part of April. He will then compile all those and submit them at a later date during the year. And I will then be notified how much I owe revenue. And it will be a princely sum. It's going to be a princely six-figure sum, that's for sure. I know that much, and I will cry. The day that I have to cut that check, I will be crying. I know that much, for sure. Short the markets. Okay, well, if you're a short bias trader and you think the markets are worth shorting, you know, you do you. Good luck. The only free lunch you get is if it's a dog's dinner and you get down and start licking the dog's bowl. That's the only free lunch you get. Can I show the 14,000 one again? 14,000 one. Were we talking about the? Which one was it? Which one we're talking about? Ah, yeah. Okay. I'll show that again. Yeah, Michael, certainly. Okay, so here we go. This one is. This is as you can see, it's 14,000 account. This one, if you go into my link tree, you click on the white trade net. Learn to trade stocks and shares with a fully funded active account up to 80,000 share profit. Up to, because you're talking about the 14,000. You get a $14,000 account, put 350 bucks in there. So what's that, about 290 pounds or something like that, 320 euros or whatever. So you put your 350 bucks in there, and the rules are that your account value cannot go lower than 13,300. Okay, your max loss is 700. So if you lose, and again, the way I would approach this, if I was doing this today, the way I would approach this is that on any given day, I'm going to set myself a $100 profit target and a $50 risk, so that you know at the end of the week, if you get 3 green days in a row, that you've made it 500 bucks. So do that to start off with. Over the course of a month, you've only paid 350 bucks, but over the course of the month, you've made 500 bucks. So you get to keep 700 of that. So that's 2,000 that you'd have. So you'd get 1,400 in your pocket. They would pay that out at the end of the month, 1,400, and then the next month you would you start again with the 14,000. Or you could just say, look, I want to keep it there and trade with it, or just take, because it's their money, just keep doing it. But what I would do is build a little cushion on that 14,000, so that if you do get hit with a big loss, you lose 500 bucks, that you're not staring into the abyss trying to recover from it. So you build up a little cushion, and you have a word with them and say, look, I don't want to take my profits this month. I'd rather just keep them on the account for now, and that's fine. You know, you can work with that. So on a monthly basis, what you don't want to be doing is this on a long-term basis, long-term strategy. This is a good way to start earning whilst you're learning. So you adopt a little bit of risk management. You're putting 350 quid into the market, and that's your tuition fee. If you lose 700 bucks, that means that it's done, and they're taking as much of a risk as you are, because they're matching your risk with the $700. They're matching your risk. You're risking 350, they're risking 350, which I think is a bloody good deal. So what they're doing here is they will keep 30% at the end of each month. They will keep 30%. You'll get 70%. So if you want to keep that in there and keep practicing, they'll even give you access to a practice account if you want to do that without actually addressing the 1,400. So start off with the practice account, get profitable on the practice account, and then move to the 1,400. Why not? So that's another way of getting access to the markets. Okay. Now, if you want to put 2.5K in, or risking 4,000, I think the $14,000 account is probably an easier. It's a better risk thing, because it's 50% your risk, 50% their risk. So you know. Okay. So that's and then if you like crypto, crypto's all the rage, particularly with Gen Z, and I think crypto is the be all and end all. Then do the same thing with the crypto account. Put a couple of $100 in and see if you can be profitable, rather than not. Okay. So I'm going to wrap up the stream, and I'm going to finish all the different streams that I'm on, Twitter, Twitch, YouTube, etc. And I will see you all bright and early for tomorrow. We'll have a same time tomorrow, but we'll only have an hour before the market opens. So I'm just coming in for 12:30 my time. So that'll be 8:30 market time. Okay. So yeah. Okay, so this one's interesting. So you give 200 of your real money for a challenge. Laugh my ass off. Okay, what you're laughing at? What's funny about that? You expect them to give you a something for nothing. That's what it is. Okay, that's what's known as a poor man's mindset. Without investing in yourself, 200 bucks is a drop in the ocean to learn how to trade. Without investing in yourself, you're destined to live a life of poverty. And what I mean by that is you're going to be working a 9 to 5 your whole life. You're going to be working manual labor or dead end jobs that you don't like, and you're going to be doing exactly that, a job. And you know what that means? It's just over broke. So if you've got a job, you're just over broke. You lose that job, one stream of income, and you're 3 paychecks away from poverty. And you're never going to get away from that cycle if you're not prepared to invest in yourself. So 200 bucks is I would spend 200 bucks on a meal. I go to a restaurant, I'll pay 80 euros for a bottle of wine. So 200 bucks for a potential to learn how to trade, or to get an understanding of how difficult it is to trade even, is a snip, in my opinion. But that's just my opinion. What do I know? Crypto can be an account cripple if you try day trading it. Love all these words: prize, profits, big money references, big scams. Well, it's not actually. It's people. I would rather risk someone else's money than my own whilst I was learning. If I'd put 350 quid into an account instead of 15 grand into an account when I was starting off, and traded in the simulator that I got with that account, I've just shown earlier, Dash Trader is the direct access platform that I use, and I'm paying 200 bucks a month for the platform and data fees on that. Now, 150 bucks if you want to use it as with level 2, if you want to use it as a paper trading account, a simulator, if you will. So that's 150 bucks just for a platform. So what they're effectively giving you is, for a little bit more than what you would get from a simulator, they're giving you the ability to actually earn money. So they're giving you the simulator, and they're giving you an account that you can actually earn money with, or a challenge that will give you more money with. So it's a win-win scenario. So either you go and pay for a simulator, or you go and open an account with a broker and they charge you platform fees of 100, 150 bucks. Or you go with someone like TradeNet Academy and you try out the strategies that you've learned in an environment where you have the potential to open a $80,000 account and become profitable. And of course, they only allow you to trade, like most brokers as well, they only allow you to trade in the open market, not pre-market or post-market hours. But to start at 200 bucks, you've got to take a step back and say, okay, well, with an 80 grand account, realistically, what should I be, $80,000 buying power account, realistically, what should I be setting as my goal on a daily basis? Well, you should be aiming for what, between $500 and $1,000 a day in profit on average. So if you're making $1,000 a day in profit, that's $5,000 a week. That's $20,000 a month. That's $250,000 a year. And how much did you put in? 200 bucks? And you're laughing, saying it's a scam? Okay. You do you, boo-boo. You're trading, but don't make a profit every day. Please help. Well, you don't want to be making a profit. Well, you do want to be making a profit. That's a stupid comment, Tony. You do want to make a profit every day. But you've got to be pragmatic enough to know that you're not going to make a profit every day. Okay? First and foremost, I don't make a profit every day. Last week I had a red day. At the moment I'm averaging probably 4 out of 5 days profitable. Certainly this week, this month I am. So I had a red day on the first week of the month. I had a red day on the second week of the month. I've just had my red day on the first day of this week. So this is the third trading week of the month, and I've had 3 red days already. So some of it is consistently profitable, that is experienced, that's comfortable with his strategies, that knows how to do it. Isn't, I'm not profitable every day. You need to move away from the fact that you're going to be profitable every day, because you're not. There's going to be red days. What you need to do is better risk management so that you have more green days than red days. Okay? That's then, if you are profitable 3 days out of 5 and you've got good risk versus reward, so you're making more than you're losing on each day, then you'll be profitable on the week. You've got to take a step back. Forget, like I said, when I closed my system down after that big loss, you don't look at it individually at that point. Okay, when you're trading, you're in the moment. You manage each trade on its own merits. But when that trade's finished, whether it's a winner or a loser, whether it's a gain or a loss, you take a step back and you say, okay, well, where am I on the day? If you're red on the day, you take a step back and you say, okay, well, where am I on the week? If you're red on the week, take a step back. Where am I on the month? And you keep doing that. And ultimately, you want to be a profitable trader. Not everybody is profitable on the week, the month, the year, or anything like that. So most people lose money. Most people lose money in the markets. That is given. Why is my power bank not working? There we go. So most people lose money in the markets. The reason that profitable people make money is primarily they have a strategy which involves risk management. If you have a strategy which is built on the fundamental principles of risk management, not only will you end up being profitable, you can lose 50% of your trades and still be profitable. You can lose half of your trades and still be profitable. So that's the thing there. You've got to accept that you're going to have red days. And as a beginner trader, as a newbie to the markets, you're going to probably have more red days than you have green days. So you can have 3 red days out of 5 and still be profitable if you manage your risk properly and you have a good risk versus reward ratios. If you're managing your risk at 2-to-1 on each trade and you've got a 2-to-1 in terms of profit goal and max loss on each day, then the likelihood is you're going to be profitable even if you are only profitable 2 days of the week. So it's about having a better risk management strategy, or a strategy that's based around the fundamental principles of risk management. So yeah, you're trading every day is okay, but understand not every day is going to be a profitable day. One secret you can share: rental income eventually becomes retirement income. Don't rely on government money. Absolutely don't rely on government money, which is the whole point of me having multiple income streams. I'm not reliant on my trading. I make more money out of my trading than I do anything else, but I'm not reliant on my trading. I have multiple income streams. I have passive income streams, and that's the key, is that, yeah, you want to have investments and things. If you can invest in things where in instruments where you've got to get derivatives, and you're going to get paid out on a quarterly or annual basis, even better. But right, there you go. Okay, I'll end the stream there because that is the end. So I will cut this and see you again tomorrow, 12:30 GMT, 8:30.